Hi everybody, we're back. I hope at this point you have a pretty rich understanding of what it is we do and who we serve, what an emotional connection is, okay, the level of detail that's required to satisfy a qualified lead in regards to the benefit to their business. After this, that's the basic, the crux of the reason why they're talking to us. Now we're going to see if they're worth it for us to be talking to. Okay, we got interest. Now let's see if they're able. So willing, able, within a certain amount of time, that's what makes a qualified lead. Willing is going to be based off the emotional connection. Everything else on this page is going to be designed to determine if this person is worth our time. Okay, so first question after when would you like to see? Oh, pause real quick. When he gives you the usage on two, we're gonna loop. It's a persuasive technique called looping. Okay, he says we say, how is the $100,000 going to benefit your business? He says online digital marketing, and then you go, when would you like to add the online and digital marketing to your existing marketing campaign? So we take the key point from the question before and we bring it into that third question. So we say, how is the $100,000 going to benefit your business? I'm going to buy a truck. When would you like to see that truck in your fleet? How's the $100,000 going to benefit your business? We want to get some new sales guys. When would you like the sales floor humming? So we're using visual words that take the information they gave to us, we repackage it in a visual way and give it back to them. This is looping that emotional connection for effect, for emphasis, because that's the reason they buy. All right? Okay. Now let's actually see if they're qualified to talk to us. What are the average monthly deposits into your business account? What are the average monthly deposits into your business account? The reason we say average monthly is because we don't want to know just what last month was. We need to know what he averages, because he could have had a high month or a low month. Okay. We say deposits into your business account to differentiate between revenue that he generated, okay, for the business, because he might be skimming cash. All right. And also to differentiate against the personal account. We don't work with personal accounts. We don't do consumer lending. We work with businesses that need financing solutions. Okay. So what are the average gross monthly deposits into your business account? That number that he gives you should be within a 25% variance from the amount that he needs. What does that mean, Mike? That means that if he wants $100,000, he needs to be doing about $100,000 in revenue. Okay, he's going to qualify for between 75 and 125% of his gross monthly deposits, at least with regards to a merchant cash advance, which here is the starting point. Okay, so if he says he's doing 10, there is no way on earth that he's ever going to qualify for 15 or 20. It's not going to happen. It will not happen. It'll never be a qualified lead. It'll never be a sale. Okay. So what you have to do at that juncture is tell them. It takes guts to do sales, guys. So say, sir, just so that you understand, typically in one shot, I can secure you between 75 and 125% of your gross monthly deposits. So if I got you $10,000 now and another $5,000 in 2 months, how would that help the business? Well, I got news for you, ladies and gentlemen. If he's doing one bulk purchase and $15,000 is truly what he needs, it's not going to help the business. I'm sorry, doesn't qualify. But in many cases, they'll give, when they said working capital, They said they wanted to do marketing, and they wanted to hire new salespeople, and they wanted to renovate the sales floor. That's 3 usages. That $100,000 is actually $30,000 a project. Any smart business owner doesn't take on more than one project at a time. Robert's probably dying laughing at this because I do, in fact, take on more projects than one at a time, but I never call myself a smart business owner. So slow them down. Say, whoa there, Nelly. If I was able to help you start with this, and then we went to that, do you see how that could work? More often than not, they will. Okay? So average gross monthly deposits into the business account should be right around what they're seeking. If it's not, you need to manage their expectations, break up their usage, and see if we can finance them in tranches to get to where they need to be. Or at that point, if they have a significant amount of revenue, okay, if they're doing $50,000 a month, $75,000 a month, $300,000 a month, say, you know what? I think you should speak with my director. Go ahead and shoot it over to me personally. I'll figure it out for you. Okay? Next. Question number 5. Technically, it's 5A. Have you ever been in a merchant cash advance? Have you ever been in a merchant cash advance? Have you ever been in a merchant cash advance? See the inflection, guys? This is bringing back what we talked about yesterday. It's either a yes or a no. Okay? If they say no, you should say, well, do you know how they work? A merchant cash advance is a purchase and sale of future receivables at a discount, which is represented by a factor rate. I'll say it again. A merchant cash advance is a purchase and sale of future receivables at a discount, which is represented by a factor rate. The funds will be collected in a daily, weekly, or biweekly draw, or as a percentage of your merchant processing batch. The rates are a little higher than bank rates. However, the turnaround, documentation, and underwriting required is significantly lower. So I can have funds in your account tomorrow, which satisfies your immediate need, while we figure out a more long-term sustainable solution. Is that okay with you? All right, great. Again, managing expectations. If they can't handle a daily, if they can't handle a weekly, or don't have merchant processing, they're not our guy. The key to sales is speaking to someone that your words resonate with. If you're not speaking to a buyer here, walk. They're a waste of your time. All right. Now, have you ever been in a merchant cash advance? If they say yes, oh, what is your current balance? Do you remember the name of the company that you're with? Do you remember the term that they gave you? And was that a daily or weekly? And then you go, how much was it? If they say daily, on a daily basis. If they say weekly, you say on a weekly basis. What are we doing here? 2 things. Okay, well, a couple things. By determining who funded them last, who the provider was, we can determine roughly what their credit worthiness is. Okay? By determining how much that they were received or funded, we can determine basically what they qualify for, or at least what they qualified for at that time. By multiplying the payment by the term, we get the total payback. And if we divide the total payback by the amount they received, we know the rate. So now we know what we have to beat in order to win the business. In addition to that, if their balance is extremely high or they have multiple balances, it gets increasingly tricky to satisfy whatever their need is. Okay, so if they have 3, 4, 5 balances and they're looking for anything other than to consolidate and lower their debt service, or a chip shot of $5,000 or $10,000, it's probably not going to work. Okay, it's worth a review. Have your manager come look, but understand that you're running on thin ice. Okay? Do you mind doing me a favor and just shut that for me? So, conversely, if they have one balance, okay, they want to pay that balance off and they want to net some cash, then the net 50 rule is going to apply. Well, what the hell is that, Mikey? So the net 50 rule states that when refinancing an existing position, the borrower must receive from the new advance at least 50% of the proceeds. So if he's doing $100,000 and qualifies for $100,000, then his balance needs to be $50,000 or less. So that way, after paying off the 50, he has 50 left, which he receives. It's a little bit of math. I hope no one's brain blows up. I'm sure you'll be fine. Now, if there's two advances, he needs to net 75. Unless he has a 700 plus credit score. So two advances, his balance needs to be 25 if he's going to receive 100. Unless he has a 700 plus credit score, in which case he only needs to net 20%. That's why we like highly qualified, high credit score borrowers. Next, if he says, if you go, have you ever had a merchant cash advance? And he says yes, and you ask what the balance is, and he says 0. Okay, that's fine, but you still need to get all the information to figure out who lent him money. Why? Because we're going to figure out if he paid and satisfied that debt. Okay. Moreover, when we get down to tax liens, judgments, pending claims, that's question 7. If he says that he had a 0 balance, but he's got a judgment, that judgment is probably for that balance. If he said that, if he says no to both those questions, and then when we pull credit, we find it, well, he's either going to pay to play at this point and pay heavy because we can't trust him, or we might need to walk on the deal because we build better businesses, and you're not going to build a better business with a bad set of ethics. It's that simple. So question number 6. Over the last 30 days, have you had any negative days or NSFs? Over the last 30 days, have you had any negative days or NSFs? This is important because we collect our funds through the automated clearinghouse, which is the ACH system, which debits the funds from his account on a daily or weekly basis. So if he has substantial number of negative days in his account, more likely than not, he's going to have negative days in his account in the future, and we won't be able to collect on those days because there's nothing to collect. Okay? As a general rule, if he's had over 7 in 90 days, he does not qualify. If he's had over 3 in the last 30 days, probably doesn't qualify. At least not for a premier product. We can figure it out, but in order to figure it out, he has to have a justifying factor, which the best justifying factor is high revenue. So if he's got negative days, ladies and gentlemen, and more than, let's just say more than 5 in 30 days, he needs to be doing $40,000, $50,000 a month in revenue. Otherwise, there is no justifying factor. Please don't send it through. Just take it, ball it up, throw it at your neighbor. Okay? Let him have fun with it, because all it's worth is a wad of paper ball. Next, have you ever had any tax liens, judgments, or pending claims? Have you ever had any tax liens, judgments, or pending claims? This is important, okay? A tax lien, the government can come seize a bank account and take all of the funds out of it, right? Because they can do that, it makes it extremely risky to be financing that account and have our money being collected from it, okay? If he has a judgment or a pending claim, really what we're asking him is have you defaulted on a lender? That's the guys that do judgments more than anybody else. Okay. Alternatively, it could judgments will sometimes show up from business relationships. Partnerships went sour. As long as that judgment or tax lien is smaller, okay, what he owes is substantially smaller than what he'll qualify for, we will move forward. Okay. However, it's tricky. So if that comes up, if he says yes, get as much information as you can and make sure whoever's taking it is aware. All right. Now, question number 8, and this is going to be the most difficult question for many of you to ask. It is a personal question. It is an intimate question for many people, but I have a news for you. If you ask with confidence, they will give it to you every time. And if they don't, who cares? F them. Let them go. All right. I can ultimately pull the credit. I just don't want to because it has a negative impact on their business. And I'll get it when I talk to them because I'm going to say it with confidence. So, team, so what's your credit score look like? Ballpark. That's how you should say it. So what does your credit score look like? Ballpark. By adding ballpark to the end of that, we're saying you can average, you can guess. It lets them relax. It makes it more informal. You'll have a higher response rate. In many cases, guys, they'll say, I don't know. What you're going to say to that, well, if you did know, what would it be? If you did know, what would it be? Well, if you did know, what would it be? 55 to 75% of the time, you go back in there and say that, they're going to give you a number. Okay, that gives us a starting point, a reference, and we can move forward. Now, finally, guys, question number 9 here. Do you have any assets of substantial value that you'd be willing to pledge as collateral? Do not forget to say that you'd be willing to pledge as collateral, because we're not trying to buy their stuff. We're just trying to secure our loan, hard money loan, equipment lease, whatever. We're looking for alternatives to a merchant cash advance. Okay. So do you have any assets, specifically real estate or equipment, that you'd be willing to pledge as collateral? In this scenario, guys, if it's equipment, nothing less than $50,000 in resale and liquidation value, which is really $100,000 piece of equipment, or 2 $50,000 piece of equipment, or 5 $20,000 pieces of equipment. If it's real estate, the value needs to be $500,000. It really needs to be $500,000. There are some exceptions to that, but generally, $500,000 and up to about $10 million is where we're going to be, playing, and where you're going to be seeing. Now, those questions are answered. We should be able to identify if this person is qualified for our time. Okay, but we need to make sure that we can get a hold of them, and we need to make sure that the interest is legitimate. The interest, if he does not give you 2 phone numbers to reach him, one of 3 scenarios is going on. Either he's an owner-operator, so he's a truck driver, ladies and gentlemen, and that cell phone number is his work number, okay, because he works out of his office. He doesn't have a different number than his home phone number. He either gives you both numbers, or he only gives you one number, and that's because he really wants to give you a bird. He's not actually interested. He just talked to you because you're a pretty sounding voice on the phone, or because he's bored at his job. But a real interested buyer is going to give you both numbers. And here, ladies and gentlemen, is the best way to present this. Now, John, the number we're on right now, is this your business line? Yes. Okay, great. What's a textable number I can shoot you out a quick question should my underwriter have one? Okay, what's a textable number that I can shoot you out a quick question should my underwriter have one? So that a textable number, ladies and gentlemen, is a cell phone number. But if you say, what's your cell, what's your mobile, they're going to say, I don't want to give you that. So what's a textable number? I can shoot you out a quick question. Should my underwriter have one? Alternatively, when you ask them, is this the business line? If they say no, what line is it? It's the mobile number. So then you go, oh, well, what's the business number? There you have it. You got the sheet filled out. All right. Now it's time for either the transfer, LSAL transfer, or a tie down from the stateside people. And we're going to have another call after this, or another recording after this. Really dive into further qualifying and tie down and identifying other products and solutions for the stateside people. But for our group, our wolves over there, the transfer goes like this. Okay, so typically in this situation, I would set an appointment and have my director follow up with you. But John, I believe your situation qualifies for immediate action, and I see a director available now. Do you have 2 minutes to speak to him? Great. Hold. Don't say please hold. Hold. Say it affirmatively, authoritatively, confidently, and they will sit there and wait until it is time for us to speak to them. Okay? If they say no, then you're going to set the appointment, and you're going to set the appointment as follows. Okay? What time today would be better for you? And then pick 2 times. 2 or 4. 3 or 4, 5. Then when they select a time, that's called an alternative close when you give them 2 options like that, you go, now is that Eastern Standard? Is that Central Standard? Is that Mountain Time or Pacific? Those are our time zones in the United States. Because your 5 o'clock, maybe his 7. Maybe. Okay. So which one works better, 2 or 4? Now what he may say is, I don't have time today. All right. What works for you tomorrow morning? 8 or 10? Do you guys see what I'm doing here? I'm making it as close to right now as possible. Because, ladies and gentlemen, we were not the only people calling. There's another 15 calls behind us. And you just spent 15 minutes collecting this information. Let's put it to use. All right, John. I just sent you out a calendar invite. It's for the time, blah, blah, blah. In that invite, you will find an easy 1-page application as well. So link to my online application. If you'd like, go ahead, fill it out, and fire it back with your 4 most recent months of merchant and bank statements. That way, we're talking offers and opportunities on our next call. Does that sound fair? Okay, great. What time do you think you can get that back to us so that we're prepared accordingly? Great. I'll keep an eye out for it. Thanks, John. Look forward to speaking to you tomorrow, too, when I get you on the phone with the director. Have a great day. All right, team. Some takeaways here. If it wasn't important, it wouldn't be on the page. All right? In sales, you want to move from the introduction to the close in the shortest amount of possible time. So we're not asking about their cousin or their mother or how Wisconsin feels this time of year, unless we're trying to develop rapport to get them back to the questions we care about. So ask them the questions on the page, try not to deviate. If they start getting off the train, then you deliver a rebuttal, bring them back in, or you try and connect with them with a joke, a laugh, or a comment about where they are. Okay? But ask the questions in the order. It will deliver you results. Second, ask the questions the way they're written. A tremendous amount of thought from some very, very sharp people went into developing this script, this product. It has worked for hundreds before you, thousands before you, and it will work for hundreds after you. But if you take it, you make it yours, you embody it, you will find success. And from there, we can take you up. As you master it, we take you up to the next level. So everyone, this was the longest video of the day. Go ahead and break it up if you'd like. I'm looking forward to seeing the results and hopefully meeting all of you in the near future. Wish you the best of success. Have a great day.